Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's a weak start to the trading week. The Nifty trades around the 10,650 mark. Banking stocks are the biggest sectoral laggard. Dr. Reddy's is the top gainer on Nifty today after the US FDA completes inspection of its Srikakulam unit with zero observations. HDFC Bank is among the top losers on Nifty after the new FI monitoring system shows lukewarm response from foreign investors. Indian 10-year bond yield spiked to 7.9% after a government official says hardening interest rates inevitable given inflation trajectory. And IDBI Bank MD and CEO M.K. Jain has been appointed the Deputy Governor of Reserve Bank of India for a period of 3 years.
Well, that's the headlines. Viewers, thanks for tuning in to Countdown. My name is Neeraj Shah, and let's take a look at what the markets are doing. It's been a very lackluster day, but you would have to say that while we started off well, courtesy the Nifty Bank, we pulled off quite quickly. In the first half an hour itself, we were down in the red. And look at the Nifty Bank, that's trading close to the lowest point of the day, down about 1%. And this is courtesy, of course, no gains in HDFC Bank. Let's bring up the heat map. Before we get to the mid caps and the small caps, just bring up the heat map up on the screen. And when we started off, 4 rows were green. Now we almost have 3.5 rows of red, and not substantial pain, but a fair bit of pain in specific pockets. So amongst the heavyweights, Bharti down about 2%, HDFC Bank 1.77%, Kotak Bank is down about 1.45% as well, and that's led to banking by and large looking slightly wobbly. Not too many gainers, save for maybe Reliance Industries and Dr. Reddy's. We don't have too many stocks which are really buzzing about on the gaining side in the large cap pocket. Dr. Reddy's, of course, for specific news. Reliance Industries seen some buying as well. Otherwise, it's a fair bit of red on the screen. Banks have lost some sheen. But the broader end, a fair bit of cuts that have come into a select names, especially the mid cap and the small cap end of the market. The number of stocks which have lost out quite a bit is interesting. Firstly, the gainers, some bit of gains to SAIL, some bit of gains to Vakrangi, and Sun TV continues to rise and shine. So about 4% higher for Sun TV in the session today. So that stock has done well. But look at the list of losers, and they will come up on your screen, both the mid caps and the small caps, and you will see the cuts are fairly large. This is a set of liquid losers, the likes of Arcom as well as Emphasis. But if you move on to the small cap end of the market, the cuts are fairly high. The list of gainers, very small. SpiceJet, HFCL has been a recommendation. Maybe that's why it's doing well. But look at the losers. Shankara Building, Quality, India Cements. These are stocks which have lost out a bit. Shankara Building in particular last week has come off, down another 5% in the session today. So all over the place. Manpasand Beverages too in the red. So there is a fair bit of pain at the broader end of the spectrum for sure. Is it showing in the liquid universe though, Navneet? I don't know. How's the start of the series looking like in terms of the build-up?
Not good, Neeraj. Reason being, when we started the June series, there was a huge discount seen for both frontline indices, Nifty as well as Bank Nifty. Remember, Bank Nifty specifically started the series with a discount of over 200 points, which we've not seen in the recent past. And as we speak, Nifty futures, the discount has actually gone up to almost 33 to 34 points, which is not a great sign. And starting with this new week today, we've seen fresh short positions being built up for both Nifty as well as Bank Nifty. So open interest higher by 4% for the June futures. Pull up Bank Nifty as well, 6.5% higher. And look at that discount. It's 85 points as we speak, as Bank Nifty is one of the top sectoral laggards also for the day. Let me tell you, Nifty has breached its 20-day moving average for the day. In fact, as we speak, it is trading below that. The 20-day moving average is 10,665. The support for Bank Nifty on the downside, watch out for level of 26,200. That's where the support will come in. Currently, Bank Nifty is trading around the mark of 26,380. In terms of option strike, what's happening? There is more of call writing actually, which we've seen, and not surprisingly, considering the sort of weakness that we've seen, 10,700, 10,800, both these strikes have seen addition of almost 7 to 8.5 lakh shares. On the put side, some bit of addition seen for 10,600. So watch out for 10,600. That could be probably the other support after the 20-day move moving average has been breached today. In terms of stock futures, Sun TV, Neeraj highlighted this counter. In a weak market also, it's been holding up to its gains. So quite surprisingly, if you can just pull up the intraday chart, I think now it's sitting at day's high level. On the future side, some good traction has come in for this one. It is at day's high with 4% gain. We've seen some build up on the future side, telling you that the traders are taking fresh long position. 11% higher for OI increase. PC Jewelers is the other one, which has fallen in very high volumes once again on the cash side, 16.5% lower. This stock continues to be under pressure. And if you look at the futures of this one, the open interest has surged quite sharply, 28% higher. So at every level, traders are taking short position for PC Jewelers, Neeraj.
It's looking wobbly, and then an entire list, Navneet, of those companies under additional surveillance measures.
Yep.
I don't know if it's marketers looking for excuse for these companies to go down, and therefore that's happening. But HEG, Graphite, Himadri, Merck Electronics, Goa Carbon, Butterfly Gandhimati. Just look at that entire list of names which are under this additional surveillance, and all of them are trading at lower circuits. There's some GVK Power is down and out as well, trading at, it is on a lower circuit as well. There is Goa Carbon, there is Venky's, India Glycols. Not all of these names have in the past shown suspect earnings. In fact, the earnings for a bunch of these have been very, very robust. But I don't know if it's, it's probably got to do with wanting an excuse to really dump a bunch of these names as well. But certainly down, and down on not very heavy volumes. The volumes haven't really picked up on any of these. 16, 17, 18,000 shares. In certain cases, it's about 4,000, 5,000 shares. So the volume picture hasn't looked too great for these names. We'll watch out for some of these. Okay, it's Monday, and as a norm, we get your global voice at the start of the week to talk about all that's happened and what lies ahead as well. Joining us is Altaf Kassam of State Street Global Advisors from our studios in London. Altaf, good morning to you. Thank you so much for taking the time out and speaking to us at Bloomberg. I hope I got your name correct.
Good morning. Yes, that's great.
Okay. Just wondering, what's the prognosis? Last week, the US data was strong and the global markets did reasonably okay. But across the board, when I look at the emerging markets by and large, they seem to be wobbly at best and coming under a fair bit of pressure at worst.
Yeah, what I think we're seeing is that the dollar strength combined with the oil price rising, combined with the increase in geopolitical risk, that's a bad combination for emerging markets. So we have seen investors pulling out of emerging markets, most notably out of emerging market debt. We still believe that the fundamentals are strong and that, if anything, this can be seen as a buying opportunity. But as you say, the market seems a lot more fragile than it did, for example, 2 or 3 months ago. And this is taking its toll, and it may be a few weeks before markets really recover on the EM side.
Altaf, if that were to continue, because we've also seen in that emerging market basket, India is also a place where the foreign investors have been taking money off the table in the last 2 to 3 weeks at least. Yep. And if one were to go by the recent Fed minutes, which do signal a rate hike in the month of June, do you expect this trend would continue because the fund flows will move towards developed markets like US?
I think that would be an issue. I think the Fed has been very careful under Powell about being upfront about what it's going to do, being clear on its messaging, being very transparent. So I think that will give investors time to position. So I don't think we'll see any kind of panic or a rush for the exit. But you're right, if the Fed continues to raise rates in a measured way, if we don't get the same kind of clarity from the RBI, then we could see a bit of a dislocation where money starts to flow continuously out of the Indian market and into more developed markets. But at the same time, a lot is in the RBI's hands. They need to think about what they're going to do, how they're going to talk to the market. And it's still a strong earnings story. There's still growth in emerging markets, and especially India. So all is not lost, but it's definitely a crucial time right now.
Altaf, what's been the reading then with regard to Indian macros? Of late, the concern has been crude oil prices inching higher. Rupee was also depreciating. Obviously, in the last 3 to 4 days, we've seen some bit of appreciation coming in for the currency also. There are inflationary concerns as well. So would you be surprised if the rate hike is in June this time around from RBI, or the biggest metric to be watched out from this meeting will be the commentary which comes from the MPC?
Yeah, I would definitely look out for the commentary from the MPC. I think that will give us a much clearer picture than we've had so far on what the intentions are. But as you say, you know, if the oil price continues to push much higher than $80, if the rupee continues to weaken, then that's a pretty dangerous combination. So it's really dependent on the language we hear from the MPC and on the direction of oil prices, I would say. We don't think the dollar goes much higher from here, but it's always a possibility if the Fed come out a lot more aggressively in the face of the data we saw at the end of last week.
And how much rate hike do you expect from RBI for this year, 2018?
I mean, the market consensus is correct, so we wouldn't expect it to go much further than that. But at the same time, you know, central banks' policies are to react to what's going on in the market. If we saw the rupee continue to depreciate, we might see more of a rate hike. But again, as you said, it's really about whether inflationary pressures are strong or if they are more subdued. And a lot of that depends. We saw this big, on the face of it, Q1 GDP print last week. A lot of that was due to base effects. Those base effects will probably carry on for another month. So I think, you know, it's a case of not judging everything based on one data point, but trying to see where the data is leading over a few months before we make any judgments.
Besides the macros, Altaf, what's been the other concern with regard to Indian markets? And the reason I'm asking this question is because there's a lot of FI outflow. Once again, like 2017, the support for the Indian markets have come in from the domestic institutions. We do speak to a lot of these market experts. They do cite reasons such as higher valuations. And if one were to look at broader markets, they've corrected and corrected very sharply so far in 2018.
Yeah, I think, I mean, what you would have to say, even though we're broadly constructive on equity markets globally, is that it's really hard to point to anywhere where valuations are substantially cheap. And the Indian market is no exception. So we've seen the price-earnings ratio creep up over a couple of years. And, you know, as I say, it's hard to point to any market now and say that it offers true value. So it's going to be a time when investors are looking more for sectoral stories, more for themes that will drive markets, rather than being able to, if you like, jump on a kind of a beta bandwagon that they have been over the last couple of years and simply let the market take them higher. So it's going to be a time for a lot more discrimination. It's going to be a time where hopefully skillful active managers will be able to let themselves differentiate themselves and show active outperformance. And typically, it's going to be a lot more of a difficult time to just own the market. I think a lot more discrimination is going to be required.
If you remain constructive on global equities, Altaf, tell us which are the markets, according to you, globally that are likely to outperform them this year?
So we're still constructive on emerging markets generally. We think the growth is there. We think, as I said, you know, valuations are relatively stretched globally, but between developed and emerging actually has a bit more of an attractive valuation. Outside of equities, we still like the long end of the yield curves, especially in the US. We think that if there's a flight to quality, and also because of pension fund buying, you should still be long duration treasuries as well. So I think there's a kind of a barbell approach there where we like the risky assets in equities and particularly on the emerging market side, but we think you need to have a bit of a block of safety as well in your long duration US treasuries.
Okay, and within the emerging market basket where you just stated you're constructive on, if you could tell us the countries in the pecking order that you're bullish on.
Well, we have to put China first, I think, and that's because there are structural reasons why China is a market that I think investors are going to almost be forced to invest in over the next few years, and clearly one of those is index inclusion. So we've heard from MSCI, they started their first half of their inclusion of Chinese A shares into their emerging market index, and that's going to progress in August, and then it may carry on if market participants are satisfied with the liquidity there. Similarly, Chinese bond markets are going to enter more global bond indices. Again, that's going to provide structural inflows. So I think China has to be top of our list. But I think after that, I don't think India is far behind. Again, we think the macro story is quite powerful, but you need to worry a bit about how the RBI is reacting, how the RBI is messaging, and as you say, whether this domestic demand that so far has been what's really propping up the equity market is going to be enough, whether foreign investors will return as well.
That's a very valid point, Altaf. Let's see if the domestic support that one is seeing for the Indian equities, that continues throughout the year or not. Before I let you go, a word on the trade war fears being which is coming from the Donald Trump administration. In case if that comes out to be true going into 2018 in the second half, what sort of impact do you see because of that on global equities?
Yeah, I mean, unfortunately, a trade war is a lose-lose, and I think the US realizes that, and I'm hoping that they're using this as more of a negotiation tactic rather than wanting to go all out. But a trade war would be bad for everyone, and unfortunately would be more negative for emerging than developed markets. So I can only see bad outcomes if we really enter into this more retaliatory, more tit-for-tat kind of trade war, which seems to be what the G7 is kind of building itself up to. We'll hear more from their summit in Quebec, but, you know, honestly, I can't see a good outcome from an escalating retaliatory trade war, and it would unfortunately be worse for EM equities than anywhere else.
Okay, Altaf, we'll leave it at that note. Appreciate you joining us today and taking us through your views on global equities.
Okay. You know, it's a bunch of stocks, Navneet. I was just looking at stocks which are at 52-week lows, and a lot of them out there which are trading with reasonable gashes, but at 52-week lows. So the likes of Jubilant Industries, Kohinoor Foods, Indian Metals and Ferroalloys, HTIL, there is Pokarna. Lovable Lingerie is at 52-week lows. Dredging Corporation is at 52-week lows. So a clutch of names which are trading very close to their recent lows is fairly large in today's session. Not too many stocks which are gaining in trade. Okay, now before we get to management, just get in the sector in focus. Sugar stocks are in focus after prices have recovered from record lows. So is there a revival on the cards? Yash Kapadia is here with more details. Yash, what's causing the rise in prices?
So the IC sugar, which is the global benchmark for raw sugar trading, has seen its best ever monthly gains in the month of May. Now, global sugar prices, they have moved higher by more than 9% for the month after a national truckers' strike in Brazil disrupted supplies following protests demanding the reduction in fuel prices. Now, as a result of this, production at most of the Brazilian sugar mills, they had been halted due to a lack of diesel availability needed to operate the plants. One of Brazil's largest sugar producers, they said that on Friday that they would have to declare force majeure for some of its contracts due to lower inventories with them. Back home, the domestic prices have rallied as much as 12% from May 21st after the government said that it would consider the proposal of setting up a sugar buffer stock amounting to some 30 lakh tons. That apart from their decision to also set up a ex-factory benchmark sugar price. So these are the key factors that are influencing sugar prices.
Thanks to that, Yash. We will watch out. Well, sadly, it's not showing in the way the stocks would react, unfortunately. Still continue to reel under pressure, most of them. What is also continuing to reel under pressure today is Som Distilleries. They've approved plans to raise funds to the tune of 150 crore rupees. So how does the company plan to utilize these funds? Let's ask that to Mr. J.K. Arora, the CMD of company. He joins us right now on the show. Mr. Arora, good having you. Thank you so much for speaking to us at Bloomberg Quint. What's the rationale for the fundraise, Mr. Arora? It's about 150 crores, if I'm not wrong.
Yeah. Rationale is very simple. We are going to use this fund for the expansion of our existing capacities and for the acquisition purpose.
So would the entire amount be raised in a single tranche, and would you need to utilize these funds in the immediate future, or are you going to raise the funds of the entire amount of 150 only if the need be?
Yeah. It's a 100 crore is by the one investor only, and the 36 crore is going to be from the promoter's side. So not to get our equity diluted, we are putting up 36 crores from our side, and 100 crore is the letter of intent we have received.
So what's the current capacity that you have, considering you're raising these funds to augment your capacity? If you could tell us, how much more capacity would you add to the current capacity after this exercise?
You see, we in our Madhya Pradesh plant, we have got about 1 million cases, this thing, and Karnataka we have added 0.5 million cases. It is the total is about 1.5 million cases. This capacity we are going to add another 1 million cases, and the acquisition will add another 0.5 million cases. So it was, in totality, the capacity is going to be the double in the coming time.
By FY19, are you suggesting it will be 3 million cases?
3 million cases is for the flagship brand.
Okay.
That we have sold 3 million cases, and this year we are planning to sell it 5 million cases. Our flagship brand Hunter beer. This year we are planning to sell it about 5 million cases. For any beer brand or any liquor brand, if you sell it about 1 million cases, that's considered to be a successful brand. This year, this brand is going to be about 5 million cases.
Okay, and what's the current capacity utilization? Is it over 90%? Is that the reason that you're looking to set up more capacity, considering demand is good?
Yeah, presently we have a real capacity constraint. This season we could not give the stocks as per the demand. The demand is comparatively very, very high, and we could not cater even 60% of the demand of the market. So it has become inevitable for us to increase the capacity.
Why this decision to allot the funds to a single investor? Wouldn't you rather have had a bunch of investors coming into the company?
You see, we need to expand it now very fast, and since the opportunity is in hand, and the investor is also of A grade, so there is we didn't find anything wrong with this thing.
Okay, you can't share the name, I'm guessing.
Yes, you are right. We could have given it to the many investors at this thing. But since this acquisition is also ripe, and the capacity is also need to be expanded with an immediate effect, so we have taken a call to go for it.
You can't share the name, I'm guessing. You can't share the name of the investor?
Right now, not. We are proposing the EGM on 29th of this month. So once it is ratified from the EGM, then we can definitely disclose.
Mr. Arora, I'll tell you one small problem that people might have with this is that if you indeed such a strongly growing company, you've spoken about a 50% growth rate in FY19 and then some more in FY20 and FY21, why is it that you're diluting so much of equity at such low valuations if indeed the growth rates are looking so strong? Why not use alternate means of fundraising to help you in this capacity expansion plan?
You see, we are not diluting. You see, 100 crore is coming in the company. So we are putting also 36 crores not to get our equity share diluted. So the precise reason for our share is not getting diluted.
No, Mr. Arora, Mr. Arora, which is fine, and
Yes.
I will get to that as well. My question is more largely from somebody who's invested in the company, your market cap, if I'm not wrong, currently is about 683 crores. 136 crores coming into the company. That's about a 15% or dilution of equity. Why are you doing that when the valuations are so low? If indeed you believe that the growth numbers are going to show, why are you diluting so much of equity so cheap?
You see, we have the opportunity in the market. You know, the present growth path. You know, we have to. You see, business opportunity does not knock many times. We have the business opportunity. The demand is so much of the brand. We need to expand it fast. We have to increase the capacity to cater the market. And you're right, we could have waited, but then opportunity need to be available in the market.
What's the debt equity, sir?
For the business opportunity. Yeah.
What's the debt equity of the company? Was raising debt not an option at all?
No, debt is always available. Debt is always, and we have also taken the debt in this year, and we are planning to have some debt also, because once you do this acquisition, then you need to upgrade the plant and you have to put it up for the working capitals and all. We are on the debt side also, which will be primarily used for the working capital and all. That for that we will have to take the debt.
Okay, but you didn't consider taking debt for this capacity expansion.
This capacity expansion is primarily for the acquiring the assets. You know, the plant.
So you didn't consider taking debt for acquisition of the assets.
No, that is not. You see, no scheduled bank will give you also for the acquisition or for this thing. Nobody will give you the funds for this. As per their charter, they cannot give you the funds for the acquisition. Either you go to NBFC or something like that. So the scheduled bank will give you money for your business expansion in terms of working capital, etc.
Okay. What's the current debt equity, Mr. Arora?
Presently, it is 0.3.
0.3. So, okay. It's just, I mean, the only interesting bit about all of this, Mr. Arora, I have no doubts that you've been very vocal about the growth path of the company, but at 0.3 times debt equity, why is it that you didn't consider that? Any chance you may have had your reasons. My final question, Mr. Arora, is with this fund infusion and one, would you be able to share the rate at which the equity dilution would be done? And two, both for the promoters and the investor who's coming in, and two, post this fund infusion of 36 crores, what would be the promoter stake in the company?
After this infusion of this, the equity dilution is not there. The equity.
So the promoter stake stays at what, 25%?
The same.
So stays at what, 25%?
Present is 23%.
Okay.
Which is going to be about 24% from post this investment.
Mm-hmm.
From 23 it will go up to 24%.
What's the amount at which this is being done, Mr. Arora? Can you share some numbers there?
That is going to be the as per the SEBI this thing formula only. That's you know, they have that formula for which nobody has a scope to make any changes. So.
Okay.
Whatever is the SEBI formula is, this price is going to be on that basis only.
Okay, Mr. Arora, we'll wish you all the best. Thank you so much for taking the time out and speaking with us, and all the best with your capacity expansion plans. That's so.
Thank you very much.
The stock down about 6% in trade today, post the news flow about the equity fundraising that they've proposed. A bunch of other names, which is looking soft as well. Good time actually to get in our experts on board and try and figure out how are they approaching trade. The market as we speak is down about 0.5%. The Nifty Bank about 350 points in trade. The mid caps and the small cap indices should come up on your screen. Just get the mid cap and the small cap index and the market breadth. I would suspect that is looking wobbly as well. At the lowest point of the day for the mid caps as well as the small caps, and the market breadth 1:6 or 1:7. Slightly above 1:6 in favor of the declines. It's not looking very, very robust. Hemen Kapadia of KRChoksey Securities joins us in the studios, and Sumeet Bagadia, Associate Director at Choice Broking, with us on the show as well. Gentlemen, both of you, good afternoon. Many thanks for joining in. Unfortunately, Hemen, it's not turning out to be a good afternoon if you're a bull.
A very good afternoon to you, Neeraj. Yes, but frankly speaking, we've had a weak rollover. Nifty had a rollover of around 58%. The last 3 month average was 67%. Last month was 72%. Bank Nifty went overboard. We started at 29 lakh shares, and we've shed some interest. Nifty's added some 4-5 lakhs. I think Bank Nifty's added some. So one gets a feeling that it's a skewed market. The advanced decline line is woeful. Like you mentioned, the mid caps and small caps are terrible. Nothing seems very positive. The bank credit policy could provide some fireworks, but if HDFC Bank's fireworks couldn't fire up the Bank Nifty today, I am not quite sure what is going to happen. So I'd be cautiously bearish. I'd wait for the event risk to pass, though I don't think there's much of an event risk, but whatever. So once that is out of the bag, I have a feeling that things are not looking good. So markets are getting heavy. 10,800, 27,100. I know 27,100 seems a far cry now. So 10,8, 27,1. These are the levels to watch out for till they don't get taken out. And if they don't get taken out in the next 5 to 7 trading sessions, it's Humpty Dumpty fall down for the markets.
Start of last week, I guess you were bearish on Bank Nifty, right?
Yes, it was, frankly speaking, a very clear sell, Navneet. And then single-handedly thanks to HDFC Bank, Bank Nifty went berserk. But it has unraveled a bit too quickly and a bit too fast. The Bank Nifty made a higher high, Navneet. The MACD made a lower top. This is the daily chart. So frankly speaking, the inflection point, maybe it's the beginning of the week. It's a new settlement. The data hasn't warmed up yet. If you look at the call puts, it's 11,000 and 10,200, which is too wide to make sense of. I think the market is finding its feet, but whatever I'm seeing, I think the mid caps pull the main lines down, or the main line pull the mid caps up. I think the former seems more possible than the latter. I think the mid caps will pull the main lines down. So maybe a bounce coming in the next 2 days, assuming we don't make a new high. I think things are going to get bad.
Okay, so cautiously bearish on the market is the view coming in from Hemen. Let's also check with Sumeet Bagadia. What's his view on Nifty and Bank Nifty, considering the weakness that we've seen in the last 2 sessions? Sumeet, would you take any position right now or choose to stay away?
Hi, good afternoon. Well, see, last couple of hours we have seen that Nifty has been in pressure. From higher levels we have seen a sell-off in Nifty and Bank Nifty. In fact, both the indices now at present 10,600 act as a major support for Nifty. So till the time these levels are not taken away, it's better avoid shorting Nifty and Bank Nifty at present levels. As far as levels of Nifty is concerned, 10,600 will act as a major support for Nifty. Till the time a closing below 10,600 is not seen, it's better to avoid fresh short at these levels. At the same time, if anyone wants to take a chance, then can take a chance by going long at the current market price, because risk-reward ratio is much better at present levels, with the stop loss to be placed at 10,600 levels on lower side for a pullback target of around 10,700 and 10,750 levels. Immediately the range for Nifty is 10,800 on higher side, and on downside the support is placed at 10,600 levels. Either side breakout, we will see a move around 150 to 200 points. If by chance the supports are taken away, then we will see a fall in index till 10,500, 10,450 levels. At the same time, if resistance is taken away, then we will see a upside move in Nifty till 10,950, 11,000 levels. At present, risk-reward ratio is in favor of buy side, so it's better to initiate long positions with a strict stop loss to be placed at 10,600 levels on closing basis. At the same time, Bank Nifty has given a very good correction from the levels of 27,000. We have seen a fall of around 600 to 700 points. Immediately, the support for Bank Nifty is placed at around 26,000 levels. Till that time, 26,000 is not taken away convincingly, it's better to avoid short positions at current market price. If we see a dip of around 100 points from present levels in Bank Nifty, then that should be used as a buying opportunity. One can initiate long at CMP also for a pullback target of around 26,600, 26,800 levels.
Okay, but the selling pressure is only intensifying. As you look at the indices, I think we're at day's low, 10,625 for Nifty, 26,283, and watch out for Sensex. It may just breach the 35,000 mark in today's session. But let's get you some trading strategies going with regard to individual stocks. Hemen, what are you recommending in trade?
Frankly speaking, I have a couple of buy calls, but to be honest, even I take my own call with a pinch of salt, because maybe it's too early, but a lot of caution needs to be observed. I like Lupin with a stop loss of 760 and a target of 805. I like Just Dial because that's on the fourth wave on the daily chart at around 550, stop loss of 535, target 580. And as far as the Nifty is concerned, I'll sell that 11,000 call and the 10,300 put. I'll sell a strangle, Navneet.
Okay, that's a strangle on Nifty. Sumeet, what about you in terms of individual stock? What are you recommending in trade?
Two stocks for the day. One is on buy side and the other one is on sell side. I think immediately the buy side counter is Reliance Industry. Reliance Industry is looking good on charts. From here on, there is a possibility that we might see upside move in stock till 960 or 980 levels. I think for a trading perspective, one should initiate long positions in Reliance Industry at the current market price. If there is a dip of around 8 to 10 points from present levels, then that should be used as a buying opportunity for the upside target of 960 and 980 levels in next couple of days, with the stop loss to be placed at 920 levels on lower side. The second stock for the day is Infratel. Infratel is looking weak on charts. The stock is giving one-way correction, and in last couple of months we have seen that the stock has given a correction from the levels of 380. Now it's quoting below 300 levels. Chart says that from here on there is a possibility that we might see extended sell of till 280 or 270 levels. For a trading perspective, one can initiate sell positions in the stock at current market price, with the stop loss to be placed at 304 on higher side for the downside target of 280 levels in next couple of days.
It's looking slightly weak right now. Let's get in a fundamental voice on the show. Sanjiv, Bhasin, Executive Vice President at IIFL, joins us right now on the show. Sanjiv, good having you. Good afternoon. Thanks so much for joining in. The texture at the broader end of the spectrum seems to suggest, Sanjiv, that people are in profit booking mode, either because the P multiples are high, or earnings haven't come in, or a combination of both, or just that the mood is so somber that takes some money off the table. Is that the sense that you're getting at your desks as well?
Yeah, hi. So Neeraj, I don't know if there is any profit. Mid caps are getting slammered like there is no tomorrow. And it's a strange dichotomy. The Russell 2000 in the US is hitting fresh all-time highs, and that comprises of mid caps where earnings have been relatively good, and actually we think that that's the best place to be. So we think mid caps, small caps, the carnage is overdone. That gives you an opportunity. Now for whatever reason, whether it's NAV balancing or mutual fund adhering to new norms, we think that the road is very clear as far as earnings go on the mid cap side. We've seen auto sales, we've seen cement dispatches, we've seen NBFC numbers, all have pleasantly surprised on the upside. And I think that this bloodletting may be reaching a bottom, but I think it's a very opportune time if you can take a bit of risk to buy some good steady mid caps, or buy some good SIPs of good mutual funds where you have a good mix of mid caps and small caps. Because I think that we are closer to bottom. We think the pessimism may be overdone because of the RBI rate hike or whatever is to be done by day after. Oil is in a downturn according to us, and as we go to the middle of June, it may actually see more weakness in oil. So I think there is too much of pessimism and maybe a bit of this political unnerving, which has seen this sort of weakness persist in the mid-cap stocks.
Sanjiv, how much of the correction is a function of the reclassification with regard to new guidelines which have been issued by SEBI with regard to large caps, mid caps and small caps for various mutual funds?
Yeah, a large part of that is there. There is reclassification, there is auditor problem, there is rumors on that RBI initiating more cleavages. But I think it's all built in the price. I've never seen such a big dichotomy. Like I said, globally mid caps is the favorite or the toast of the town, and here you are seeing no light. And strangely, everyone is trying to chase that 30 stocks on the large cap, which are actually getting more and more expensive. So I think the pain is overdone. If you are a value investor, this is the time. This is the time to put your money where your mouth is. If fear is there, the prices are definitely on your favor.
Where are you bottom fishing then, Sanjiv, in terms of mid-cap stocks?
So whole host, whether it's we thought the numbers of PFC were relatively very sanguine. The language on the more from the power finances is extremely positive. Bond yields are falling, and we think that once this addressal by the finance ministry, the power ministry is done within June, you should see a new set of norms which should be very positive. PFC seems very good to us at 80 rupees for a target of 120. SAIL after the results has again given an opportunity at 70 rupees. We think that is very good. It can give you a target of 90 rupees. 260, 262 on IGL is an extremely attractive price given the results and given that gas prices have actually risen. And I can go on, whether it's Tata Global, where the correction was overdone, or some of the, more consumption plays like a Jubilant Food, again, which merit buying. But take another Indian bank where we think the results were fine, and this whole dichotomy of PSU banks may be overdone. If you heard what the State Bank chairman said, he said that second half of 2018 they would be definitely going into the profit, and most of the leverage on the NCLT would actually see a right back going forward.
Wow, interesting. Sanjiv, so I'm presuming in all of these cases, you not only like the valuations, you also like what the management commentary is about what the growth numbers in the next few years would look like.
Correct. It has to be a mix of both. Just to give you an example, we've been recommending buying Biltcon all the way at 825, 800, 825. We think this whole auditor fiasco may be overdone. The company seems very bullish on the road forward. They are getting L1 contracts across the board. It has a par excellence execution, and we again think that construction reality in the shape of tier 1, tier 2 cities and growth over there is going to be the next paradox of growth. Look at India intensive place. Power is at an the heat has given you power consumption at an all-time high. And if I heard the REC chairman, he said we are going to reach 3 crore houses in the next 6 months. So how can you not but be bullish? And I agree that there are problems with some of the assets, but most of that is being taken care of. We know the transition from thermal to renewable is on the cards, but you are in a regulated business where the next 2-3 years are going to be extremely positive with a mismatch of demand supply persisting and demand being far outstripping supply.
Okay, so those are a couple of stocks with Sanjiv likes at lower levels from the likes of REC, PFC, Steel Authority. Remember, there was an upgrade which came in from Citi today where they've changed the rating to neutral from sell and also raised the target price to 83 from an earlier target of 50. So that's the stock which is doing well. I want to pull up India Cements. I think it's touched its 52-week low in today's session. It's seen cuts of almost 7% a day's low. Hemen 116.7. How are the charts looking? Can it go lower from here?
Yes, the entire cement sector technically is finished. Whether you look at Ultratech, you look at ACC, you look at Ambuja, you look at the stronger ones, Ramco. I think it's all over. It's going to take time. If you look at Ultratech, now a small example, Ultratech formed a distribution pattern over 9 to 10 months between 3800 and 4600, and now we are on the cusp of breaking downwards. Okay, near term there could be some positives coming in. Ultratech could probably start moving up today, but coming back to India Cements, looks shaky, Navneet. And yeah, having said that, in the extreme near term, everything seems just that little bit oversold. But India Cements peaked at 225 some 10 months ago, Navneet, and we've been getting hammered till then. So maybe a dead cat bounce here and there. Last saving grace was 135. That's gone for a toss. No, except some unsustainable recovery somewhere, it looks bad, and I think the entire cement sector has gone for a toss.
Okay, well, the other stock which is exhibiting a bit of strength in a weak market. In fact, not only today, last week throughout, it was up in trade barring one trading session, is IGL, Indraprasth Gas Limited. That's sitting with gains of almost 2% in trade as we speak. Sumeet, on the charts, IGL around the current levels, would you recommend taking any trade here?
Trade should be on buy side. IGL has taken support at lower levels. From here on, there is a possibility that we might see a move in which we can see a move around 10 to 15 points from present levels. I think one can initiate long positions in IGL at the current market price. If there is a dip of around 4 to 5 points from present levels, then that should be used as a buying opportunity. Downside, one should maintain stop loss of around 259, 260 levels. For the upside target of 280 as an immediate target, and if 280 is taken away, then we can see move till 295 levels. I think for next couple of days, it's better to be on buy side in IGL.
Okay. What else? There are some stocks which are correcting. I mean, so, you know, we've been talking about how a clutch of these names have fallen off the cliff today. Sanjiv, Bhasin, you know, some fairly decent names included in this ASM list are getting butchered today. Some companies with some fairly strong growth trajectories over the last couple of years, and the management's continuing to speak positively as well. Have you been able to scan through that list, and did some of the names surprise you? I mean, I'm not saying that by getting included in these names, which means that there is some or other problem with either the management or the trading pattern, but the market is clearly not liking the presence of the names in this list.
No, Neeraj, I have not had the time to see that ASM list, but I know that just as I mentioned, Dilip Bilcon, a lot of the others, I think the management has to be clear on commentary. They should try and resolve this uncertainty. Auditors may bear part of the blame. You know, they have to realize the type of market cap destruction for you know, which has to be in sync with the management, and I think that has left a sour taste. But like you said, you know, look at the positives. Walmart 1 lakh crore on a Flipkart, Bajaj Auto, Hero MotoCorp, Maruti coming out with all-time high numbers. Cement sales are picking up. NBFCs like Bajaj Finance. You know, it's a whole gamut of stocks which are and sectors which are showing you a lot of traction. So again, I say don't miss the woods for the trees. This is the time to put your money where your mouth is. Be a little brave-hearted. I think some of the mid-caps are giving you extremely good risk opportunity. I don't rule out a 30% upside in the next 6 to 9 months.
Cement form a part of this list as well. I heard you mention that. Apparently, the trading patterns are not looking all that great, Sanjiv. The quarters, though, or the quarterly numbers looked, I mean, half decent for some companies. Mid-cap cement, is that what you were saying?
No, I want to stick with large cap. I think, you know, we know that this is a slack season, but you can't ignore the type of housing activity. I mean, any NBFC which has come, it has said that housing is where the money is. Here, the State Bank of India chairman and what he said. And I think cement, you know, after the monsoon it's going to be a given that Ultratech, Ambuja, ACC, Ambuja at 200 rupees. You know, these are very, very attractive places to buy these stocks. The fundamentals, the brands are good enough. JK Lakshmi Cement. So, like I said, you know, technically there is weakness, which we know, but that the weakness is for a cause. So, you have to be more brave-hearted that you're getting blue chips at a very attractive price. And we know that cement is going to be the next harbinger of growth. It's just like autos. So, you see two things in a growth economy. It's CV sales and cement. And I know that cement after this month will again start to show strong traction, and maybe more, you know, pricing power comes back after this monsoon.
Sanjiv, you mentioned about the housing finance space too, and Indiabulls Housing Finance currently has seen some correction coming by. I think that's the top loser as we speak. On Nifty, yep, it is at day's low, down 4%. Any thoughts here, Sanjiv, Indiabulls Housing Finance?
Well, as a disclosure, this is one of the top three which we have picked: Bajaj Finance, Cholamandalam and Indiabull. Indiabull is a given. I think it saw a very sharp rally from 1150 to that almost 1300 or 1280, and now it's seeing some sort of weakness, but that's more to do with the market tune. I think this is one of the best performing NBFCs, and any decline should be a buying opportunity. So buy that whole basket of Bajaj Finance, Indiabull, DHFL, and you know, which I just mentioned, Cholamandalam. I think that numbers were also very, very strong.
Okay. Sanjiv, thank you so much for taking the time out and being with us today. I'm hoping that the optimism that you have rubs off on people and making some smart investments. Thanks for taking the time out and being with us today. That's Sanjiv Bhasin with his thoughts on, well, specific pockets. Clearly there is pressure on the markets, but whether this is the end of it or no remains to be seen. HDFC Securities certainly doesn't believe that something will go wrong for Larsen & Toubro. It's in fact the pick of the week. What's the rationale behind the same? Let's ask that question to Atul Karwa. He's fundamental research analyst at HDFC Securities. Joins us right now on the show. Atul, thanks for joining in and taking the time out. Why L&T, and why L&T is the pick of the week? Atul, can you hear us? No, I think there's a bit of a problem here. I don't think Atul can hear us. Well, we'll wait. HDFC Securities pick of the week. Just bring up that stock though. Keep in mind, typically an HDFC Security call on pick of the week tends to bring about a positive reaction. There's a large set of retail clients, but it's just the nature of the market and the size of the stock that leads one stock to do what it is doing today, which is not too much on a day like this. It's not cracked too much, but it is weak. Atul, thanks so much for joining in. Can you hear me?
Yes, I can hear you.
Great. Atul, this is Neeraj here. Good afternoon. Why Larsen & Toubro, and why Larsen & Toubro is the pick of the week?
Well, basically, L&T has a track record of over 7 decades in the erection and construction segment, and it's a proxy play on the infrastructure development in India. Of late, there has been a government thrust on building roads, railways, and urban infrastructure under various projects like Bharatmala, Namami Gange, and dedicated freight corridor. So the company has a very strong order book of almost 2.6 lakhs crore at the end of FY18, and it had order inflows of 1.5 lakh crore in FY18. Besides this, there is a defense opportunity to be explored, which is expected to be almost $150 billion over the coming decade. And the company has been getting out of its non-core sectors and utilizing the proceeds to invest in high growth sectors. So, and it is also focused on improving its working capital management and return ratios, and early signs of which are visible. So we think L&T is a good investment play right now.
Atul, how are you reading the valuations of L&T currently? And I know the earnings for the fourth quarter were better. You mentioned one of the rationale behind the investment could also be the attractive order book. The guidance, I guess, the management which they had laid out for FY19 was above what the street was estimating. So in terms of valuations, how much risk reward do you see for this investment?
Well, we have valued the company on the basis of PE, and we believe the target of the company is 1511 is our first target, and 1614 is our second target, which comes to around 22 times of its consolidated earnings, 22 times and 23.5 times of its FY20 consolidated earnings.
And what's the take with regard to the deal they signed with Schneider for selling their electrical and automation business for about, I guess, 14,000 crore? Any more clarification on that? I think that's still subject to regulatory approval so far.
Yeah, they have just recently signed at the beginning of May, so it's subject to regulatory approval, and that's the information available to us as of now.
What, according to you, can be the concerns going ahead for L&T?
The concerns, like there are high levels of NPAs and the balance sheet of banks are pretty stressed. So they may be a bit hesitant to fund the infrastructure projects. And there are project delays and a lot of project delays, so the payments might get delayed. And the international book, which accounts for almost 25% of the company's total order book, has been subdued. So on the international front, there might be slow growth in order book.
Okay. Is this the best play in this construction equipment stroke cap goods stroke infrastructure space, or would you believe that there could be mid-sized names which could give a bigger bang for the buck, Atul? I mean, I'm not decrying the fact that L&T is a good idea and therefore people should have it, but within that coverage universe, is L&T the top pick, or do you believe there's something else that takes that place.
And if you look at the mid cap sector, there's a lot higher risk as of now. So, considering that, L&T would be the best play in the construction space as of now.
Okay. Okay, Atul, we'll leave it at that. Many thanks for joining in today and giving us that perspective. Appreciate your time. That's Atul Karwa of HDFC Securities with his thoughts on why L&T. I tell you what, even in a weak market, by the way, HDFC Bank is down, but even in a weak market, M&M continues to rise. That's about 1.5% higher, so it's a good move for Mahindra & Mahindra in the session today. That stock is rock solid. What's come off for the last few days is Bajaj Finserv, 5757, so that insurance major has come off quite rapidly from the levels that it was trading at. Not the best of days here. Hemen, have we already asked you about Bajaj Finserv? If not, can you look up the charts?
Yes, Bajaj Finserv. We've just recently posted a fresh all-time high, Neeraj. The bigger picture seems quite solid. Near term, we are clearly exhausted. We've sort of cooled off a bit, but I don't see too much of a downside currently. 5.7 is support, 5,700. If that breaks, Neeraj, I think if that gets breached in terms of closing, I think that would be a cause for concern. Otherwise, nothing much. We've been in an uptrend for a long time and nothing changes. Last 9 years we are in an uptrend and we continue to remain so. And just last week we posted a fresh high, Neeraj. I think it seems like profit booking, nothing much beyond that.
Okay, profit booking seen in Bajaj Finserv. It was down on Friday as well, 2.5% lower, and today also it's trading with cuts of almost 2%. Pull up the intraday chart of BHEL. That has fallen almost 5% in trade, and some short positions have been seen on the future side, almost a day's low actually for BHEL at 76. Sumeet, on the charts, would you recommend taking any fresh shots at these levels?
Better to avoid fresh shorts at these levels because the stock has already given a correction in last 3 days, and from the levels of 85 we have seen a fall of almost around 10 points. Now our stock has support at around 74 levels. Till the time 74 is not taken away, we can see a bounce back move from those levels. I think if by chance the stock is able to break 74 levels on lower side, then we will see a fall in the stock till 68 or 66 levels. At present, it's very close to support levels, so it's better to avoid fresh short at current market price. Those who have taken short at higher levels, they can hold on their existing short positions with a trailing stop loss to be placed at 77.50 on high side, and on downside they can book their profits at around 75 or 74.50 levels. And for fresh buying, one should wait. If the stock is able to break 77.50, 78 levels on higher side, then they can go ahead and initiate fresh longs for the targets of 85 levels.
Okay. I mean, PC Jewelers once again is on a free fall mode. I think it's almost down 16 to 17% in trade. Any strategy that you would advocate for June series here, considering the sort of volatility that one is seeing for this one?
No need, frankly speaking, it's a bit too volatile. But even then, if I were to come out with a mad cap strategy, we are at 129. Closer to 100, I'd go stop loss with a 7 rupees stop loss, 7 rupees to lose and 28 rupees to gain. So we took support last time at 95, Navneet, on 3rd of May, and we gave a bounce till 260. I guess we're going to come back and test that level soon, and if that holds and gives a dead cat bounce, fine. That doesn't, then we're going straight to 80. So a small stop loss and a ultra high risk sort of a strategy.
Well, before we take that break, just want to mark Avanti Feeds amongst other companies, which is down in the session today and has been down for the last few days now, about 15-20% in the last 4 trading sessions alone for Avanti Feeds. Time now for a short break on Countdown here. On the other side, we get you the Fab 4 stocks of the day, if possible. Get you at 3:15 what are dealing rooms recommending in the session today, and some closing strategies from both our experts. All of that coming up in the next half an hour. Stay tuned.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjiv Goenka Group, growing legacies.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with countdown right here on Bloomberg Quint. 28.5 minutes left for the markets to shut shop. The Nifty Bank under a lot of pain. Bring up the European markets and just show you what's happening there. The Indian equities are a sea of red. Let's see what the rest of the world is up to. Well, a fair bit of green. Our markets have that problem. Not all markets are having issues. In fact, the Dow closed very well in Friday's session as well. Good time then to try and get you the Fab 4 stocks of the day. In a market like this, Yash Upadhyay has probably managed to dig out maybe 4 names which have had some fabulous moves today. Yash, good afternoon. Was the task difficult?
Not really, Neeraj, but thanks for that. So first up, we have Steel Authority of India. That one had surged as much as 5% today after global research firm Citi upgraded their rating on the stock from a sell to a neutral, while also raising the target price from 50 to 83, indicating a return potential of almost 15% from its previous day's close. They expect a strong volume growth for the company on the back of improved demand conditions and have raised the EBITDA target for FY19 by as much as 26%. Anant Raj is up 7% today after the company said that this board of directors on Friday had approved the proposal for restructuring its operations in order to improve their execution. To that effect, they have also set up a committee to assess all the available options and would submit a report within the next 21 days. Dr. Reddy's had at one point surged more than 4.5% after the company received 0 observations under the Form 483 for its Srikakulam API facility from the US FDA. And finally, we're also looking at Pfizer. This one had hit a fresh all-time high of 2,650 in today's trading session. It's been on a strong uptrend and has been gaining for the last 9 trading sessions, its longest winning streak since December 2013. Back to you.
Okay, Yash, thanks for bringing those Fab 4 stocks of the day. And one more stock which has gone up in trade is Lemon Tree Hotels. Let's just pull up that, and it's gone up on very high volumes. If I even compare it to Friday's volume, it's almost double, sitting at day's high, 5.5% higher. Hemen, on the charts, Lemon Tree, is it signifying anything at current levels?
Positive data, Navneet, but high tops, high bottoms, above 55-day exponential moving average, crossover buys by the mechanical indicators on the daily chart looks reasonably positive. Should be heading towards 81, where we'll run into a bout of selling, Navneet.
Okay, that's the view on Lemon Tree. That's a technical view, but let's get our next fundamental guest in the show. We're joined by Dharmesh Kant. Hi Dharmesh, good afternoon to you, and thanks a lot for joining us. Well, looking at the mid-cap end of the market, the selling pressure is only intensifying. We're almost at day's low, Dharmesh. Do you see this selling pressure continuing here?
Yeah, good afternoon. Yeah, that has been the story so far in 2018, right from the start of the year. mid-cap and small-cap segment has seen a consistent amount of profit-taking and selling pressure, and some of the stocks are in fact below your 2 years low. So, but there's a disconnect in a few of the pockets because the earnings were not so bad as the selling pressure has been seen in most of them. But I do think the way the market is panning out, maybe the anticipation of political uncertainty and how the macros are panning out for India, particularly the oil. We have seen a correction in or a pullback in the oil from higher levels, but I do think this will again change into a higher trajectory once again. So people are taking money away from the table, and you have to be very stock specific and selective into buying into that. In the mid-cap, small-cap stock, I don't see that selling pressure abating very soon. So one has to be careful, and it's better to stick to large-cap names where the visibility is clear of earnings. Otherwise, one has to be careful.
Even a large-cap name like HDFC Bank, Dharmesh, has kind of spun an interesting delivery in today's session for almost all the surges that people anticipated between Friday and now. It's wiped off almost all the gains that it clocked in on Thursday as well.
Yeah, that was more of an anticipation of a news that happened, and nothing to do with fundamental trajectory. But if one holds HDFC Bank for say 6 months or 9 months kind of a time frame or a year, because now even year is a very shorter period in equity investing. I mean a longer period, I'm sorry, in equity investing. So many things happen so soon, and all the fundamental changes are discounted immediately into the stock price. So one would be better off buying HDFC Bank even at current levels. I do see 15-17% kind of an stock price gain by the end of the financial year FY19. So such kind of correction in banks like HDFC, Kotak or IndusInd Bank is a good buying opportunity for investment perspective. So that is the way things are going to pan out. But if one looks at it at a day-to-day basis or a couple of day, 3-day perspective, then it's a very treacherous market and very dicey to play. You can hit both sides of the stop losses. So not a very good or conducive market for traders as of now.
Okay, while HDFC Bank could be lower in trade, but some bright spots seen for some of the large cap companies. Pull up in fee. It's been trading in the positive territory since the start of this day, but I guess currently it's sitting almost at day's high with gains of 1.5%. So watch out for this one. But right now, we'll talk about the chart of the day. A lot has been said and written about mid-cap IT stocks. But what's also caught the investors' fancy of late are the larger players, especially so with mutual funds ramping up their presence in these stocks. Nikki Mirchandani joins us with more details. Nikki, over to you.
Thank you, Navneet. Well, large cap IT stocks seem to be coming back, and they seem to be the flavor of the season, given that the mutual fund holding in these stocks for the quarter ended March 2018 has increased for the top 3 IT companies, which include Infosys, TCS and Wipro. On the mid-cap side, however, these mutual fund houses have been reducing their stake in the mid-cap IT names like Mindtree, Infibeam, KPIT, though Tata Elxsi in the mid-cap space and TCS, and you have the HCL Technology and Tech Mahindra from the large caps case, where this rule doesn't hold true because mutual fund have actually worked the other way around. However, in comparison, if you see, the mid cap firms had outperformed the large cap firms from quite a margin if you look at right from the start of the year and also for an yearly basis. However, the valuation of mid cap IT firms are trading at a premium as compared to that of large cap IT, and also the potential that large cap IT firms have to probably deliver as per the Bloomberg consensus seem to be better as compared to the mid-cap ones. So what explains this kind of shift in interest that we're seeing from the mutual fund industry? Well, an IDBI note explains this. It says that improving outlook for large cap IT and higher valuation for mid-cap IT peers seem to be the reason behind the shift in interest that we're witnessing from mutual fund industry right now in the IT space. Back to you.
Thanks a lot for that, Nikki. Well, interesting, but this could well be a quarterly phenomenon, not necessarily something that stays by and large. Sumeet, any trades on Nifty IT?
See, IT stocks, most of the frontliner IT stocks are looking good to me. In fact, if we talk of Infosys, the stock is looking good. Any dip in Infosys from present level should be used as buying opportunity. One can initiate long positions at current market price also, and apart from Infi, there are many other IT stocks which are looking good to me, like TCS is a good bet. Any dip in stock from present level should be used as buying opportunity. At the same time, Hexaware is looking good to me, mid-cap IT stocks. So most of the IT stocks are looking good to me for the time horizon of next 3 to 6 months. Any dip in any of the stocks named should be used as buying opportunity for the upside target of 8 to 10% in next couple of months.
Okay, so that's the view on what's happening with IT by and large. Dharmesh, what are you doing? Where there is, I mean, while there's fair bit of pressure on some of the high beta pockets, are you looking at exporters at all? IT in particular?
Yeah, from trading perspective, couple of stocks does look interesting in the IT basket, and particularly SCL Technology. I think after post the earnings announcement, the type of thrashing it has seen, it was a bit exaggerated. I think at least 7 to 8% kind of an upside stock price movement can happen by the time it announces Q1 FY19 earnings. So that is one segment, because they will have a tailwind of the currency depreciation which is played out in this quarter. So some earnings will be aggregated to the currency depreciation which has happened. So apart from that, most of the stocks still looks very expensive to me, and the headwinds which are there does remain. It's just a valuation gap catch-up kind of a play which I'm looking into SCL Technology. Nothing changes fundamentally on a broader perspective.
Okay, before we get in what dealing rooms are recommending in the session today, some pressure on financials. Hemen, we haven't done a chart check on HDFC Bank, that or Indiabulls Housing Finance, which is down 5.25% now.
Too late from an intraday point of view, Neeraj, but if I were to take, there's been a 1-year distribution pattern. Stock seems to have peaked out.
We're talking about Indiabulls, right?
Indiabulls Housing Finance. Seems to have peaked out, 1-year distribution pattern. Things are looking bad. Crossover sells on the monthly charts. The bounce is over. Looks bad, Neeraj. I think the level to watch out from a positional or medium-term point of view is 1132. We are at 1171 now. Post this level 1050. I think it looks bad. There's no doubt about it. It's just how much it goes and when it goes more.
Is it very bad, or are there any other large cap names which on a long-term chart basis have given worse signals today, Hemen?
Frankly speaking, I have, I mean, there is data. It's not that, but ideally would have liked around 10 years of data, but we have data from 2014-13, Neeraj. So
for
Indiabulls Housing Finance. So that's probably not enough to take a very long-term call. But yes, I think if you look at, like I said, some of the cement stocks, Neeraj, like in Ultratech, I think technically distribution pattern 9-year up move seems to have exhausted itself. There could be some near-term bounces coming in, but the basic move seems to be under threat, Neeraj, and you have the MACD on the quarterly charts almost giving you a sell after 9 years. So one would take that seriously. Having said that, we could give you a 250-point bounce starting tomorrow itself. But if you're saying something which has given a bad signal, many cement stocks starting with Ultratech.
Interesting. Stock is up marginally up today, but by and large, Hemen believes that there is a case building for some bit of a pullback, and a serious one at that, into Ultratech cement. It could give a bit of a bounce from these levels, even higher from the current levels, but eventually there's a higher probability of the stock coming off as opposed to the stock doing well. Should we take it to dealing rooms? Maybe a couple of minutes early, but never mind. It's a day which probably deserves that. Let's try and get in Yatin Mota and Darshan Mehta, who are here with their channel checks, and ask them as to what is it that the dealing room sources are telling them. Gentlemen, both of you, good afternoon. Who do I start off with?
So Neeraj, I'll start, and the kind of carnage that we are looking at in the marketplace is simply unbearable to the dealing rooms. In fact, if you look at the mid-cap end of the market, that has been just smashed out of shape, especially after the introduction of ASM surveillance mechanism by the stock exchanges. Probably the pain in the mid caps is quite high. But talking about dealing room recommendations, Diwan Housing is one stock wherein dealers are recommending a STBT kind of a strategy. Stock is down, almost little over 1%, and dealers expect further downside as far as this housing finance company is concerned. Also, apart from Diwan Housing, Capital First again in the NBFC space is where domestic funds are said to be sellers. So, this is also again one stock wherein dealers expecting further weakness. But on the contrary, this is one mid-cap stock wherein dealers are recommending a buy is TCI Express. HNIs are said to be buyers in trade. Pretty flat on not very high volumes, but still dealers are hopeful of a good return expectation from this logistics company. But Darshan has a few more stocks to talk about.
Yeah, so Yatin, I think you pointed it right. I think the dealers that I spoke to did also indicate that ASM mechanism which has been triggered, that has been causing a lot of worry to some of the dealers. They recommend shifting to some of the large cap, especially IT names, wherein the currency is in their favor. So Infosys for one is trading at the day's high, and even in the IT space, which is doing well, the large cap IT is something that is being recommended above. The other counter which has managed to surprise and move up today is Sadbhav Engineering. It's up 2% on decent volumes today. 1.23 lakh shares that have been traded. One of the large domestic mutual fund is the buyer in today's trade, and another counter in which dealers indicate there could be a buzz of a corporate announcement is SRF. Managed to stay afloat in a market which has fallen, but remember it has fallen post the numbers from levels of 2300, 2400 right up to 1800. So accumulation is happening there on the back of a possible announcement on the corporate side. So that's what we are hearing.
Okay, thanks for that, Darshan, as well as Yatin, for bringing that dealing room check. Dharmesh, dealing rooms are also indicating that the additional surveillance measures announced on a couple of these, mid-cap, small-cap companies is triggering the sell-off which we've seen in the last few trading sessions. How grave is this issue according to you?
See, I don't think any surveillance measures are going to, should be a cause of selling into stocks because buying and selling into most of the stock happen because of the fundamental reasons, and then everything pans out accordingly. So and the bad stocks which are there is almost known to everyone in the market. So I don't think that should be a cause of worry because people are hardly there. 1 and 2 accidents does happen, as in the case of Vakrangi or a PC Jeweler which happened. But surveillance measures are always welcome, and to my mind that should not be a cause of selling into stocks. If you bought it and if you bought a company because of the fundamental reasons of earnings growth trajectory, the business model and everything is convincing, then why you are going to sell it because of surveillance measures are there. So that should, but it's not important to me.
Any of these names then, Dharmesh, which are in the part of the SM list where the business looks interesting to you? I'm not recommending, I'm not asking you for a buy or a sell because you don't know how much further do technical factors take down a stock. So I want to hold you responsible for that. But any of the businesses that looked interesting, because HEG, Rain Industries, India Glycols, a clutch of names which have shown some promise in the past in the numbers are all a part of this list.
Yeah. I think Rain Industries is the best out of the lot, and it has shown, considerable kind of a traction. The earnings was pretty good of Rain Industries, and if any, sell-off in the crude oil prices augurs well for the company. So, and the way construction activity is going to pick up, it has already picked up, and the road construction and everything is at a higher altitude. So. I think this is an opportunity to accumulate, particularly Rain Industries. That is where I am more comfortable buying into it.
Okay, comfortable buying into Rain at current levels. From the auto pack, we've seen correction coming in for stocks like Escorts, that's down 4.5%. Remember, the monthly sales number for this one were good. Tractor sales were up 21%. TVS Motors, which was slightly below the Bloomberg estimate, the monthly sales numbers, that too has come under severe pressure. That's down almost 5% in trade. Hemen, on the charts, these two stocks, do you expect further fall?
In terms of Escorts, Navneet, yes, I have a feeling that we've posted an intermediate peak. The longer term trend remains intact, safely ensconced, but medium term peak, yes, there could be pressures coming in. Level to watch out was 930. We've broken that today. I mean, we're much below that. So the weekly charts have got spoiled, Navneet. And if you were to look at TVS Motors is slightly oversold, but that has not prevented a downward bar reversal coming in. And we've been corrective. We gave a downward bar reversal in the monthly chart in January, Navneet. So TVS Motors has sort of preceded the fall in auto stocks, and we still remain shaky. Having said that, medium-term point of view, don't see a downside below 540. So we'll drift over here before giving a bounce. But the bigger picture, it's we've given a crossover sell in the MACD way back in Jan, so it's corrective.
Okay, that's the view on TVS Motors as well as Escorts. Just pull up the intraday chart of TCS, another heavyweight in the index. I guess some support is coming from there. It was trading in the red for majority of the session. Just in the last half an hour or so, stock's seen some bit of recovery coming by and currently sitting in the positive territory. Sumeet, on the charts TCS, what do you make of the recovery that we've seen in the last half an hour?
TCS, Infosys both are looking good to me. I think one should be on buy side. One can initiate long positions in TCS price itself because the stock is looking good. It's quoting at around 1745-46 levels. Immediately downside, it has support at around 1710, 1720 levels, and it has multiple support at around those levels. So till the time these levels are not taken away, it's better to be on buy side. On high side, it has small resistance at around 1760, 1760 levels. As soon as the stock is able to break 1760 levels on high side, we will see an upside move till 1820, 1840 levels. I think for a trading perspective, it's better to be on buy side, and for a longer term time horizon, if there is any dip of around 10 to 20 to 30 points from present levels, then that should be used as a buying opportunity. Downside 1710, 700 will act as a major support, and on higher side, closing and breakout above 1760 will take stock prices to 1800, 1840 levels in next couple of days.
Bharti Airtel too has come under some stick today, 3.2% down, 3.3% down. Now is the second highest loser on the index. 9 minutes to go for trade to shut shop. Let's get in top closing strategies from both our experts. Hemen, to you first. Your top closing strategy?
It's a BTST. No, because
it's a BTST.
Yeah, because everything is bad. When it's bad, it has to turn. The market will always do what it has to do to prove the majority wrong. So a BTST on Ultratech, no, a BTST on Apollo Hospitals.
Apollo Hospitals, you have a BTST here. Okay, Apollo is Hemen's call today, a BTST, mind you. It's a buy call for tomorrow. Sumeet, what about you? Your top call for the day, a BTST or STBT, as the case may be?
Well, I do also have a BTST call. GSPL is a stock which is looking good to me. It's in green today. It's quoting at around 182 levels, GSPL. I think stock can move up from present levels, and from here on, we can see upside move till 192 or 195 levels. So one can initiate long positions in GSPL at the current market price, with a stop loss to be placed at 176 or 177 levels on lower side for the upside target of 192 and 195 levels in next couple of days.
Okay, buy on GSPL is the advice coming in from Sumeet. Dharmesh, coming to you, in a market like this where there's a lot of selling pressure, would you look to pick up something at lower levels?
Yeah, definitely. We always, talk about when the steep correction has happened, and fundamentally if the stock is good, one should be buying it. So, but we never do that generally. So this is the time when, cherry picking has to be done with a clear perspective and a vision that from here, wherever you are buying a quality stock, 10-15% more kind of a slide can happen. And to my mind, Bharat Electronic looks very interesting at 110, 112 kind of a price level. Though Q4 earnings was not so encouraging, but it has more to do with accounting booking of the order book. So I don't think it's the normal flow of the business, because if you look at the order book, it's around 40,000 crores, 10,000 is the annual revenue they book. So almost 3 to 3.5 years kind of a clear-cut visibility is there. And last year 10,000 crores of orders they got, that is 33% from their growth in the initial order book which they were holding. And defense sector is where things will be happening. 90% of the equipment they make is in-house technology and research they use, and it's a very niche segment where they are operating into radar segment, communication segment, missile technology, And any further going forward, if any foreign companies wants to have a tie-up for making a defense equipment in India, so Bharat Electronics would be a front runner. Very clean balance sheet, strong debt-free company, strong return ratios, ROE in excess of 20%, ROC 25-30%. And my own sense is going forward for next couple of years, because of a low base which they already have this year, you would be seeing a 20 to 25% kind of a CAGR on EPS. So even if you value at 20 times FY19 earnings estimate, 150 is the price target coming out for Bharat Electronics. So very good risk reward ratio. Having said that, let me again say it may slip to 100 or 95 kind of a levels, but that should be the end of it. And upside by the year end, 150, 160 is very likely on the card, so one should be buying that.
Okay, Dharmesh, we'll leave it at that. Many thanks for joining us today and giving us that perspective. Really appreciate your time.
Thank you so much.
That's Dharmesh Kant with his thoughts. As we get ready to wind down trade, Sumeet, one call from you on Dr. Reddy's lab. The stock has done immensely well today. What are your thoughts here?
See, Dr. Reddy has support at around 1900 levels. I think till the time these levels are not taken away, now one should avoid short positions in Dr. Reddy. At the same time, the stock has resistance at around 2030 levels. That means once the stock is able to break 2020 or 2030 or higher side, then we will see a one-way up move till 2150 levels. This would be a pullback move. Once the stock is able to break 2150 on closing basis and with volumes if the breakout is seen, then we will see a fresh upside move in the stock, which will take prices to 2300 levels. That would be a longer term target. Now immediately for a short term trading perspective, at the levels of 1990, 2000, one should initiate long positions with a stop loss to be placed at 1900 or 1880 levels for the upside target of 2150 and 2200 levels.
Okay, Dr. Reddy's Laboratories has been trading firmly in the positive territory throughout the session today, and we did highlight TCS and Infosys inching higher in the last half an hour of trade. Alongside that, you also add Hexaware, that too has gone up, and that too is sitting at day's high levels, I guess. Yep, Hexaware sitting with gains of almost 2.5%. So IT still remains the theme on the long side so far. Also something like Jubilant Foodworks, which corrected last week, has seen a bit of recovery in today's session. Jubilant Foodworks is sitting with gains of nearly 2%. But just 3 minutes to go for markets to close. Let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, not at all good. The start of the week has not been good. The start of June series also has not been good.
Yeah, and trading closing at the lowest point of the day, Navneet, despite the globe looking a happy place, I think which qualifies more so why Navneet saying that the start has not been too great. The mid caps and the small caps will come up on his screen, and let's see if the selling got exaggerated in the last 1.5 hours of trade. But those indices too will come up at some point in time, and you will see that not the best of days. The small cap index taken it big knock, about 3% lower. I think that's the space to really look at. I mean, the additional 7 measures or the liquid names or otherwise. But let me still just briefly tell you what's happening in the large cap space. Dr. Reddy is a key mover, so that's done reasonably okay. Infosys about 1.5%, that's done okay. But aside of that, M&M marginally higher, no big gainers otherwise. Losers quite a bit. HDFC Bank, the principal culprit here, but Bharti Twins not looking too good. Bajaj Finserv is not looking too great. Indiabulls Housing Finance, of course, has gone down 5%. There's weakness in HUL too. So consumption too has come off. HUL, Titan are amongst the names which are looking slightly wobbly today. So actually the sellers are all across the sectors, not belonging to one particular space. Financials certainly have looked weak. But Navneet, the mid-cap end of the market and a small cap end punctuated by steep losses and deep gashes to a bunch of names.
That's right, Neeraj, and I'm going to start with the list of losers first. Deep Industries. This is a company which has been trading weak right from the word go in the morning, locked in lower circuit with cuts of almost 20%. PC Jewelers, we know this is a volatile counter, but even with the start of June series, we've seen some fresh short build-up coming about, 16.5% lower for this one now around the levels of 130. Merck was also weak. Remember, this was the counter which was doing well in the last few sessions, but today it saw some selling pressure coming in the last half an hour of trade. Leel Electric is now, this company has been moving lower after it posted its earnings. Operationally, the numbers were not so great. I think they posted a loss at the operating front. It was down 18%, and this counter has come off from those levels of 200 or 230, which one saw at the start of this year. Intellect Design Arena, that's the other one which came under pressure. That's closing with cuts of 11%. So the cuts were pretty huge. BHEL and F&O counter fell almost 5 to 6% today. 6.5% closing at day's low is never a good sign. India Cements was weak in trade. That one touched its 52-week low. And the list goes on, actually, when you look at the losers. TVS Motors also came under pressure. That saw cuts of about 4.5%. Let me just highlight a few gainers then. Somani Ceramics held up to its gains today. So that was up almost 4% in trade. On back of some business rejig, Anantaraj was doing well right from the word go in the morning, but closing with gains of almost 8%. Lemon Tree was up on account of high volumes also today. Let's see if something happens here. 4% higher for this one. Steel Authority on back of that upgrade which came from Citi to neutral from a sell rating earlier. That was up 5%. And finally, Sun TV. Don't know if something's happening here, but this was pretty strong even in a weak market like today's, and it held on to its gains throughout today's trading session. Sun TV finally closing with gains of nearly 4% in trade, Neeraj.
Yeah, thanks a lot for that, Navneet. I just want to mark what the currency is up to in today's session as well, and the bond yields before we start talking about what's the markets, equity markets closed as look like. So 67.07, some bit of worsening for the rupee. Keep in mind that we started off almost 20 paise higher than this. So there's a bit of a worsening here. The bond yields very tight in anticipation of what happens in the policy, 7.88. So there's a bit of a hardening of the yields yet again at 7.88 or 7.9. It's not painting a pretty picture. The market breadth then now move back to equities, and the market breadth and the volumes, and well, not a pretty sign at all. 1:6 in favor of the declines. The volumes interesting, Navneet. Let's see.
Yeah, the F&O volumes so far have been on the higher side, considering
even
it's
day one it was.
Day one, day two of the new series. We usually see turnover only between 4 to 5 lakh crore, but today it's 6.5 lakh crore. And I think, Neeraj, today people were expecting the cash turnover to pick up on back of buying. One was expecting in HDFC Bank, but that's not happened. 28,000. It'll be very interesting to see how the FI internals look today.
Yeah, certainly very, very interesting to see. And let's see if that monitoring system opening up.
I think the BSE turnover is slightly on the higher side, 5,000 crore.
Yeah, but I doubt that that's the... I mean, HDFC Bank shares show that there wasn't too much of buying any which ways. But yeah, the F&O turnover is certainly high, second day on a trot as well. And the contributors will have HDFC Bank perched on the list of losers. Top of that, they are 34 points down. So all financials really, bets of HUL. On the gaining side, some measly gains to Reliance and Infosys, but nothing too meaty. That they clearly belong to the losers. The small cap index, 3%. That's some really deep cashes that have come in. Anyways, final thoughts from our experts. Sumeet, Bagadia, keeping in mind this, I just want a chart check on the Nifty Bank. In the morning today, everybody was talking about how the Nifty Bank is showing signs of a move towards 27,800 or thereabouts. It's clearly not obeyed any of those numbers.
Yes, absolutely right. Today's move is a bit surprise because from higher levels we have seen a sell-off of around approximately 7 to 800 points. Now immediately Bank Nifty has support at around 26,000, 25,900 levels. If by chance these support levels are taken away, then we will see a fall in the index till 25,500, 25,400 levels. And if the index is able to hold the supports, then there is a possibility that we might see a bounce back move in index till 26,600, 26,800 levels. The immediate range for Bank Nifty is placed between 26,000 levels on lower side to 26,900, 27,000 levels on higher side. Either side breakout, we will see a fresh move. If supports are taken away, we will see a fall, and if resistance is taken away, we will see a upside move till 27,500, 27,800 levels. Now tomorrow, after the opening, we should see how Bank Nifty behaves, and if it takes support at lower levels, and from there if we see any pullback or bounce back, then we should go ahead and initiate long positions for the upside target of 26,600, 26,800 levels. Downside 26,000, 25,900 will act as a support, so that should be the stop loss for all long positions.
Okay, those are some technical targets for Bank Nifty, also for Nifty. Hemen, where is the support coming in for Bank Nifty now? Is it 26,200? I think the 20 DMA is somewhere around that.
Yes, Navneet, we are hanging on to 26,250, and that is one support level. Below that is 26,000 and 126 and 26,090. So some respite should come in. Plus we have a event risk, Navneet. So surprisingly the VIX has been not that volatile considering we have a credit policy. But yeah, a small bounce I don't think can be ruled out.
Okay, let's see if there is any sort of bounce back which comes in into tomorrow's session or not. But on that note, would like to thank both our technical experts, Hemen as well as Sumeet. Thanks a lot for joining us today and taking us through your technical views on the markets and also on individual stocks. Well, with that, it's a wrap on this edition of Countdown. Goodbye from my side and Neeraj. But don't go anywhere. Coming up next is the day's trading session for you on Bloomberg Quint Market Wrap.